You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. It is a dangerous world out there. Volatility is on the rise, and your clients' portfolios are under assault from a growing number of threats. Simple diversification is no longer enough to shield the assets under your protection. Registered investment advisors, financial planners, and asset managers need a new weapon in their war on risk. Welcome to the Advisor's Option, the program designed to arm busy advisors with the information necessary to properly manage risk in this volatile environment. From options education, trading strategies and tips, to industry news and interviews, you'll find it all on the Advisor's Option. The Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the CBOE over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit orats.com or email Matt Amberson at matt@orats.com. And now, it's time to learn how to implement options in your practice. It's time for the Advisor's Option.
All right, everybody. That music means we are back once again for the Advisor's Option, the program here on the Options Insider Radio Network. For you, the busy financial advisor or asset manager, maybe you're already utilizing options for your clients, given what we're seeing out there in the markets. I'm assuming many of you are these days. Demand for options never been stronger out there. Of course, maybe you're one of these potential clients. Maybe you're wondering, what skills should your advisor be bringing to the table when it comes to options? Either way, we got you covered here on the Advisor's Option. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever exciting, at least we tend to think so around these parts, and we aren't biased at all, Options Insider Radio Network. If you like what you hear, of course, nearly a dozen programs hitting you throughout the week, usually a couple a day here on the old Options Insider Radio Network. And if you want to go above and beyond, you want to join us for great exclusive content as well, like our great Pro Q&As. Just had a great one with Mr. Tony Saliba that just went on to the Pro podcast feed. Of course, you could have joined it live as well. Or, of course, the great Options Oddities we do at the end of every week, breaking down the unusual activity and a whole bunch more. Theoptionsinsider.com/pro is the place to go to learn more. And joining me, as always, on the old Advisor's Options program, our old friend, the founder over there at ORATS, a.k.a. Options Research and Technology Services. We call him around these parts the Oracle of New Hampshire, Mr. Matt Amberson. Matt, welcome back to the Advisor's Options, sir.
Thanks, Mark. I am giddy about the show today.
I had a feeling you were going to be giddy today, sir, because, listeners, we are joined by a great guest, our old friend, our regular compatriot on the program for many years, dating back to its earliest incarnation. none other than Mr. Eric COTT. You know him from his time over there at the Options Industry Council, also at IB and Merrill Lynch. These days, he's an options man about town, traveling hither and yon to get the scoop on all things options for you, the financial advisors out there. Mr. COTT, welcome back to the Advisors Options, sir. It has been too long.
Gentlemen, it is a pleasure to be back with both of you. Mark, thank you. And Matt, I'm giddy as well. It has been a really long time, and certainly we've seen a lot changed since a few years before the pandemic there, Mark. And I'm excited to share some wisdom, talk about what's going on my end. But again, I'd be remiss, Mr. Longo, if I did not congratulate you on the continued success, not only of this show, but of the menu of programs that you're bringing to your listeners and to the investor public. Congratulations.
Well, I appreciate that. Thank you, sir. It is quite the menu, quite the smorgasbord these days of people can come in and feast on over there on the network as we keep on rolling right on into the P&L statement.
What the heck happened in the options markets since our last episode? Let's find out with the P&L statement.
All right, everybody. Eric alluded to the pandemic throwing a wrench into a lot of things. One of the things that came out of the pandemic was this segment, the P&L segment, because every month it seemed like on the show we were just spending a lot of time talking about what crazy things happened since our last show. In this case, Mr. Eric, you have a little bit longer frame of reference because you haven't joined us on the show in quite some time. So obviously a lot's been going on in the markets and in the world of options and indeed the world of volatility since the last time we checked in with you. But what is top of mind for you? What is really resonating for you in terms of what you're seeing out there in the market and the vol space and, of course, for advisors since the last time we chatted, sir?
Absolutely. Well, one of the things I'd mention, Mark, is that the onset of these defined outcome funds. I mean, I believe you've had some of these folks on there. Innovator might be one of them. First Trust, we've got the guys, out at True Shares, our friend Mr. Metz, who's involved with that. Bottom line is there's been parabolic growth in that. And I think that even with the last couple of months, advisors have sort of been searching for that collar solution. And so in the ETF world, one of those things that has really just blossomed is a lot of these larger fund families offering these type of strategies, a lot of advisors finally looking at it. And then just kind of the introduction of new exchanges. Mark, I know we're going to talk about it a little later, but I was at the STA conference, I think it was last week in DC. I want to give a shout out to our friend Jim Toes and Don Combs, but that's a shameless plug for the two of them. But that Ed Tilley was there from SIBO, a good friend of yours, Mark, and of Matt's, talking about the global growth of exchanges, just looking at a lot of different things in the crypto area, offering a lot more kind of trading venues, which I'm sure, Mark, you've talked about, where we're doing dailies now, and just a whole plethora of changes. And it's really what I would say is I've been on the road lately since March and kind of introducing myself as sort of a liaison in the industry. And it's nice to kind of see more people out face to face. But the other thing I would say is that in the derivative space, there is just so much more innovation, Mark, going on. And obviously what happened during 2020, 2021 with people being home, it brought a lot more players into the marketplace.
We'll have to call you our Options Insider Radio Network event correspondent, the options man about town. You just hit all the events for us. We'll give you a sweet little microphone with a little Options Insider mic flag. What do you say? You can just do the circuit for us. What do you think?
I would wear that golf shirt with pride. I love the radio signal. I will even have that tattooed on my forehead.
Ooh,
if you need me to do
that. All right. Now we're talking. Tattoos on the forehead. I like it. I knew I missed you here on the show, sir. Well, Mr. Matt, I don't know if you could top a forehead tattoo, but what has been lighting up your tape in the markets and the world of vol and everything else since the last time we chatted, sir?
Yeah, it's funny. We were at the Option Expo out in Chicago. No tattoos, but we had ORAT's hat. Good swag out there. And we got some good people wearing it.
We got to get some of those in the studio here. We can give them out to our pro folks.
I'm putting a note right now. Send hats. And it was a funny expo, a lot of crypto. I have this feeling that somehow we're turning millennials off in the option space with the high fees for data and a lot of that. But that's maybe a different discussion. to have. But there's a lot more crypto out there in these types of shows. And as far as the market goes, it was mid September, and we're almost back to that level as we left off there. Of course, there was a large dump out to almost 350, but we're almost back to those levels, 390, 380 area back then. Again, it's a strange market out there. The vol is still very high. I think that has a lot to do with the fact that interest rate volatility is high, and that has a lot to do with the Fed. Are they going to raise how much? I think 75 at least this in November, which is I think 10 days from now, and then the next month in December, I think they'll raise another 75, and then I think they have more to go in order to, if they really are staying true to their 2% inflation target, which I don't think they're going to get to. But so I think my feeling on the market is a well-structured bearish market. They're trying to take the air out of it. The Fed is looking at all of these indicators, including the market. If it gets too hot, they're going to raise it more. So I think the market's going to have some earnings problems for when they raise vol. It takes about a year for that earnings hit to really come through. So I'm looking at volatility. It's still higher than you would think. Still in a kind of a larger uptrend, even though we've recovered quite a bit from the floor. And my other contango is still not that great. Still a little bit under zero, which is backwardation. And our forward relationships aren't that strong either. So market is climbing, but it's clawing for every inch. And I still think some of the indicators that we look at aren't that healthy. This market in the bear market can still go up to 400 something, but I think it's going to have some trouble once it gets up there for the reasons that I've talked about, Mark.
So your model's not exactly screaming, run out and dive in with both hands into this market right now, Mr. Matt.
No, you got to be careful. It's going to be, there are some opportunities. These bull runs are pretty nice sometimes, but you got to really watch what you're buying. There are some stocks out there that are oversold. They took down some home builders pretty hard. Some of it deservedly so. Some of them are renting, so they have renting out their inventory. So those aren't going to be as hard hit. So there are some buys out there, but you have to be very careful out there in the market now, more.
All right, listeners, there we go. That's the P&L statement, but it's also that time of the year, listeners. Earnings are top of mind for everyone. Again, we are deep in it. Luckily for you, we got the guy crunching all the numbers for us over there at the Options Insider to give us some insight in the earnings volatility report.
Earnings announcements can move markets, but what is the options market telling us about upcoming earnings events? Let's find out with the Earnings Volatility Report.
All right, Mr. Matt, we are back in it yet again. We've been waiting patiently for the earnings season to re-rack and start again. We are finally back in it, knee-deep. Earnings are starting to matter again. They're moving markets again. What is lighting up your tape out there in the topsy-turvy world of earnings volatility, sir?
Well, I think that's the big point, Mark, is that they are mattering again. People are really looking at not just earnings, but outlook, because people are going to be worried about earnings outlook, especially with these rising rates. So it's a different environment. How are the rates going to affect future earnings? Is there any visibility? So, yeah, we've seen some big moves out there today. Xerox, Pro, and CCK and MEDP all had over 200% over expected moves today. So we've seen a lot of those. We've seen Abbott move a lot. Interactive Brokers moved a lot the day before. Telephone, AT&T, moved almost double what they were expecting back on the 20th. and it's going back a little bit. We're only in the second month here. Snapchat, really, they leveled that one. It's actually come back. We had one of the reports we put out was, hey, this volatility is crazy. There's a time spread. It went down from 40 to 20, and now it's back above 40. So it's working out if you hung in there on that ORAT's earnings report that we put out. It's a little hard to look at the earnings season report right now because there's only so few, less than 10% of the companies have reported. But it is looking like there's a lot more movement than usual. It looks like 6% moves, and they're implying about 4%. I see a 2.8. That can't be right, but it looks like we're good. So that's 215. I have a tough time believing that. I think it's more like about a 50% return this week today and last week. So that's a pretty good season opener right there for earnings. And then we have some, obviously just a ton of names coming. We have 92% of firms to report. So there's a lot coming, and this is the third. We're in the second week, but the third week, and especially the fourth week for option straddle owners, are traditionally the best weeks out there. So that's what it's looking like, Mark.
It is a very contentious season. We are in the middle of it right now. In fact, that is our question of the week right now, listeners. Matt, I'd be curious to get your thoughts on this as well. We asked you folks since the start of the pandemic, which is really not that long before that is when we started tracking this data with Matt and his team over there at ORATS. We said since the start of the pandemic, each earnings season has only delivered somewhere in the mid to high 80s. It actually, that number has changed with the onset of the new season. Somewhere up to about a 92% now. But when we ran the numbers earlier this week for the question of the week, they had averaged about 85%. So if 100% listeners is if every name moved exactly as much as how much was priced into their straddle at the start of the season, then you'd have 100%. So 85%, obviously a little bit of underperformance. And so we asked you guys, what do you think this next season is going to be like? You think it's going to be somewhere about the same, so somewhere in the 85 to 90% range? Is it going to be an action-packed season, so dramatic outperformance somewhere north of 100%, or a pretty big snoozer below 80%? That would be pretty boring. I'm curious, Mr. Matt, what is your vote? Because you're actually crunching the numbers. And then B, what do you think our audience is voting for?
Well, I think it's going to be big earnings for the reasons that I've laid out there, especially the outlooks. I think it's going to be, like maybe 30% return to option owners. And then, yeah, as you said, the past 12 earnings seasons have averaged only in the high 80s, but now they're up to 92 because lately we've been pushing those up. We had a good earnings season last year, so I think it's going to be a pretty good one. Mark, what about you?
I'm hoping for a banger. I'm hoping for a north of 100% action-packed. I will reveal the results in a second, but first, Mr. Eric, as our options man about town here, our roving correspondent here on the network, what are your thoughts? What are your feelings as you're going to all these events out there? What do you think from the pulse of the people? What do you think people are going to say out there in terms of, are they expecting a banger cycle for earnings season, or they think a little bit quieter, or something along the same, sir?
Well, it's interesting, Mark. So I sat through, Bob Pisani just released his book last week, and I was at a pre-book announcement, and Bob talked a lot about how analyst predictions over the last 40 years have just been completely way off. And obviously there are reasonings behind it. They've done some studies at Temple University that he talks about in his book. But one of the things I just want to say is that, and I've always been a big fan of Matt Amberson. It's not because I'm on this call. It's not because he's been a great friend and colleague to your show, to me and my career and everything else. But I think more and more of what we saw, and Matt touched on it, more and more of what went on in 2020, 2021, early 2022, it begs to the reasoning why RIAs and, whether it's, sort of like family office types, need the type of like analytical services that he does. Because, when you got a guy that's lifting the hood up and crunching it, I mean, look, Matt, I mean, Mark, if you and I asked Amberson if the Yankees were going to get swept by the Houston Astros, I don't know if that would have been a good prediction. But if he's going to tell us that earnings are going to come in lower, I think that's probably the case, and that, we've got some volatility ahead of us. I mean, look, people are worried, but, look what we're seeing. I mean, I'll use, and maybe it references this a little bit, Mark, but, Buffett always said, when there's a lot of fear in the market, that's a good time to sort of jump in. When there's all that greed, maybe you step to the sidelines. And I always like when he used to say, you only find out who's swimming naked when the tide goes out. Maybe that's not something we want to really think about, but, overall, it should be an interesting earnings season. But boy, this has been an unbelievable October. Look, I mean, you go back to 87 and, and other times, this is really, I think, monumental for all of us.
It is monumental. I should have asked him before the Bears game last night. The Bears could cover. I was too scared to take them plus 8.5. That would have been a good one out there. So, Matt, maybe we need to adapt the purview here a little bit. How are your models on, let's say, the world of sports wagering, sir?
Well, I think Eric said it well. If when the tide goes out in my sports wagering, can be seen very well. Let's put it that way.
Yeah, I was too scared to take him plus 8.5. That would have worked out as we keep on rolling. But what does work out is Eric acting as our de facto options man about town because he hits all the events. We're going to get the buzz right now.
Busy financial advisors don't have time to follow the latest developments from the options market, so we do it for you. It's time to get the buzz.
All right, everybody, welcome to The Buzz, the portion of the show where we break down everything going on out there in the world of options. Maybe that you missed because, hey, you're busy dealing with your clients. I have to imagine your phone's probably ringing off the hook right now with clients because there's a lot going on in the market, so you'd be forgiven for missing a lot of this fun stuff. And let's dive right into it, Eric, because, like I said, you've been kind of the man about town at all these events. I'm glad to see, your title may have changed at different places, but I'm glad to see nothing's really changed with you. You are still pretty much on the road almost 24/7, sir. You've been at a lot of events of late, even a few that I couldn't make out there. I was going to go to the STA conference in DC. We've been down there in the past and things just came up. I couldn't make it. So maybe let's start there, Mr. Eric. This is the big, of course, Securities Traders Association event down there in DC. It's got securities in the names, and people obviously will assume stocks, but in recent years, they've added a lot of options content, also a growing amount of crypto there as well. So I'm curious for you, Mr. Eric, what did you see at the event? What were your takeaways from it? What were some interesting highlights or takeaways that you want to share with our audience, sir?
Thank you, Mark. And, and I really, again, want to give a shout out to the STA because this was their 89th annual. And I'm transitioning from an institutional role, Mark, as you and Matt know, soon to, which I probably will maybe do on your show, Mark, is launching my own consulting firm and actually trying to bridge the gap between the buy side and the sell side, given, sort of this illustrious 30-year plus career. But, going to STA, they had one of the largest turnouts, I would say over 800 live. And I think, Mark, probably over 1,000 virtual. A lot of folks from different types of firms, because obviously with the, explosion of Robinhood, there were a number of people there from that firm. They had a ton of sponsors. I felt like the content really kind of had one foot in, the derivative space, talking about some of the new enhancements, some of the new exchanges that are coming about, as well as, the just some of these what we refer to as like, outsourcing. I mean, I think one of the interesting things that that I had heard when I was there are firms that are out there totaling about 50 right now, Mark and Matt, that are sort of outsourced trading firms that are offering the most sophisticated type of trading operations that sovereign debt funds, large hedge funds, money managers, asset managers. Interestingly, Mark, you asked about advisors. These outsourced kind of trading operations are now going after some of these very large RIA practices because they don't really have the capacity, say, to put in a very sophisticated derivative desk and might not know, how to do, some of the multi-leg trading, or there might be some sort of, kind of wish list that they are working with executives on. And that's where these kind of outsourced trading firms have kind of fit the, I guess, that missing piece of the puzzle. So I thought that was an interesting takeaway. Again, a lot of the folks who were kind of in the crypto area are now getting back into the trading operation. I think we've seen some implosion go on with some of these firms as we've seen the depreciation of some of the cryptocurrencies from their highs. Ironically, Mark, I was actually at the Bitcoin conference in April, I think it was, in Miami, here in my hometown of Florida.
Quite a sea change in that space since April, huh?
Oh my goodness! And I have to say, I'm with a new girlfriend. That's a shout out to her. She's an art teacher, and I adore her. And I said to her, she likes to invest, and a lot of people getting into the investing. She's a teacher, but I felt fearful when I saw people, Mark, tearing up actual currency. U.S. currency at this conference, saying this is the change, this is it. Everything's going into crypto, and here we are today. Maybe I don't know if Bitcoin's breaking 20,000. So, I would say that the advisors are certainly, Mark, coming back to the pond or the lake, so to speak, with the analogy, dipping their foots back in the water about using the covered calls, about using sort of some of these hedging strategies. But really, for the majority, it's where do I find that solution where I can hire somebody else to manage this for me? And again, maybe a little shameless plug for myself. This is kind of why this kind of new firm that I'm launching is really kind of bringing the two together. So the advisor doesn't have to seek, search, do their own due diligence, that it's kind of like a Match.com, putting the advisor together with the asset manager or the ETF provider.
I like it. A lot to unpack there, sir. So yeah, I'm sorry I missed the STA event. It's always been a great one in the past. Interesting to see some pivoting back from crypto into the world of the quote unquote traditional finance out there. But that's not it, listeners. Eric just didn't go to the STA. He's been the man about town over there, pretty much hitting every event. Fortunately for him, a lot of them are in his neck of the woods down there in the southeastern United States. But Eric, a big stopping point for a lot of the advisors out there, which is the Schwab Impact Conference. And I've never actually been to this one myself, so I'm curious. Give us the lay of the land from this big seminal advisors event, sir.
Well, interestingly, Mark, this one is actually coming up now actually next week. It'll be in Denver next week. I will be there and excited because some of the folks that you've had on your program before, Mark, Randy Fredericks from Schwab, others, Scott Snyder, some of the other folks that play in the sort of same sandbox that have been a part of our derivative world will be there. I was at a couple of larger conferences in Matt Amberson's former surfing backyard of California and Las Vegas. That was in September. And it's interesting. The conferences are coming back. What I will be able to share with you, Mark, on the return from this is really the first Schwab conference without TD Ameritrade having their own, because just prior to the pandemic in January of 2020, that was really one of my last conferences with TD Ameritrade. And now since they've merged in, it'll be interesting to see what happens. But there is a lot of content on the agenda that sort of delves into this hedging aspect, as well as kind of, the complement of looking at digital currencies, but also tying that in with alternative investments. Obviously, as we know, they sort of still bucket the options world into that alt space.
They do. So there you go. Schwab Impact coming up. Hasn't happened yet. It's coming up out there, listeners, which is intriguing as well. Since we're doing overviews of conferences, Mr. Matt, I would be remiss if I didn't point out that you also hitting some events out there of late. Again, I'm missing all these events. This one I have no excuse for, really. It's down the street here at the Trading Show in Chicago. I've been there many times. We've done a lot of content from there over the years, including broadcasts, a lot of great interviews with crypto, a lot of crypto fans over there. So we did a lot of great crypto hits of that event a couple of years ago. It's one of those things with so many shows just come up, and next thing I know, it's Trading Show Chicago Day. Luckily, we had our New Hampshire man about town at that event, the Trading Show Chicago. Also, holding court about a topic that is near and dear to his heart, which is trading options around earnings during that event. Mr. Matt, A, give us your thoughts, your lowdown on the event, what was going on over there, what were some of the cool takeaways, and then B, give us a quick rundown of your panel, sir. How did it go?
Yeah, thanks, Mark. It went well. And the funny thing is, I've been getting emails from people that said, I saw your panel, and I'm like, why don't you come up and say anything? Because I'm a little low key.
The shy folks.
But, we had, it was great to be back in Chicago. I just forget being out here in New Hampshire, how vibrant it is to just see the people, everyone from the floor that's reinvented themselves and just people coming up, pretty constantly. So I was impressed by the conference. It was nice to be able to present to a pretty good audience. I did put some plants in there for a standing ovation, but unfortunately they couldn't bring it to themselves to get up.
I find money also works with that, sir. Sprinkle a little cash around.
I could do it for free. I'm cheap, Mark. So, but I mean, so it was great. But that's big news from Eric COTT. He's got a Match.com. I got to get my profile together. ORAT's profile together.
Yes, sir.
We do work with a lot of outsourced. I know these outsourced trading firms very well. Help, have kind of been there when they're starting up and helping them. But ORAT's. It's interesting how we fit in. We fit in. You could really. Get into our new front end. I got to show you it sometime, Eric.
Yes.
It'll be on my Match.com profile, but I could show it to you right with you. But for RAs to really set up their trading systems and then to interface with the outsourced trading firms. I mean, I think you're in a really nice spot, Eric, because I agree. I think a lot of people are going to that type of trading. It's just so hard to keep up. And, knowing when to adjust and when to exit and what to do at what time with the, there's just so much research out there. So, I think with ORATs and with the Eric COTT Match.com, I think that we're going to have a winner there.
Your wife might have some issues with the Match.com profile, but other than that, I think it would be a huge hit out there. Speaking of huge hits, listeners, we are in the middle of it right now. This has been our ongoing discussion, debate. Matt and I have been debating this since the year began, which is, of course, can this tsunami, this tidal wave of options volume that we've seen post-pandemic, can it really continue? A lot of people were fading it. I was fading it myself after that first year. I thought, okay, well, this was a unique moment in time. Everyone was trapped at home and trading became the national pastime. Can this possibly continue? And then lo and behold, we saw it continue all throughout last year. Of course, we had the meme stock palooza and everything else. The options industry ended up close to 10 billion contracts on the year last year. That's more than double what we were seeing just a few years ago, listeners. So these are historic numbers by any metric you could throw at them. So coming into this year, I had finally had my cynicism beat out of me. I said, you know what? Okay, I guess we can keep doing this ad infinitum. I think we all on the panel hope these numbers can continue. The cynic in me thought maybe we couldn't, but I was willing to be proven wrong. And the numbers coming in here for September now from our friends over there at OCC show that once again, kind of blowing the doors off there. September, the total volume up 12% from September of 2021. As you'll recall, 2021 was no slouch of a year, listeners. So we're talking some serious numbers. Total volume, 915.2 million contracts. That's up, again, 12%. And you're closing in on that threshold we've been talking about for a while here on the network. Can we hit 1 billion contracts in a month? Well, we're not that far away from it now. And also September slotting itself into the number 3 spot in the history of the options business. It's the 3rd busiest month ever. If that sounds familiar, it's because August was just the 3rd busiest month. The month before it, September said, hold my beer, kid. It surpassed it by 0.3%. That was enough to take the number 3 spot. ADV, which is, of course, the average daily volume. That's an important number to see how things are trending. That also was a new record, up 5.1% compared to a year ago. Closing in on 41 million contracts a day, listeners. 40.8 a million contracts a day. That's nothing to sneeze at. And all of that seems to be pointing towards the answer being, at least so far, throughout the end of this year, it seems like we can keep the hamster wheel on track. But Mr. Cott, as our roving correspondent, you've been out there taking the pulse of people hither and yon at events across the country. I'm curious from that and from your own perspective, A, what are your thoughts on these historic numbers we saw yet again for September? And then B, I haven't chatted with you in a while, so I haven't had a chance to get your pulse, but were you fading this surge of options volume, or were you a believer all along and you thought we could hit another record year this year?
Well, I will certainly give credit where credit's due to how efficient the OCC, along with the markets, the exchange, Mark, ran during a time of being virtually at home, and how, historical it is that, what was it, about $7.5 billion in 2020, and then, as you said, about $10 billion in 2021. And hearing those numbers from you, I didn't look at the September numbers. It seems to me, historically, as Matt knows as well, what September leading into October can be. But it's an unusual period here in 2022. And, do we start to see some of the window dressing from these 40 acts start to occur? What happens with, some of the, shifting that happens right now, globally? And how does that play into, the activity that we'll see here, cruising into the end of the year? I believe that we'll get pretty close to it. That's just, my thoughts. And listen, 2023 could certainly be a record year as well. I mean, look at where VIX is, as I'm sure Matt talks about it quite often, where it's bounced around lately. So I think it's highly probable. I wouldn't want to make a prediction, but the other thing is seeing new exchanges come on board, Mark, in the last few years, has certainly added to the activity.
Mr. Matt, same question for you. You've been playing my role a lot this year. You've been kind of playing the resident cynic here on the show. I mentioned I had some of my cynicism finally beaten out of me with just the endless tsunami of options volume. You've been a little bit more skeptical. You thought we'd have a little bit more of a downtrend in the market, and that could potentially hurt the overall volume numbers. At least so far, Mr. Matt, through September, they seem to be holding steady. A, has that surprised you? And B, are you still fading this for the rest of the year?
Yeah, my thoughts, I always overlay the Fed balance sheet with the option volume for, a long time. And that's usually driven it. Fed balance sheet is, we're saying they're going to tighten a little bit, but they're tightening very slowly. So the Fed balance sheet's still there. And I think really what has been surprising to me is how popular these expiration everyday options and SPX, XSP have been. Those have been driving it. If you look underneath the hood a little bit, it's not as impressive being the volume, but they're getting a lot of volume in those instruments. And, kudos to SIBO for doing those. And so, yeah, I mean, I'm still a little skeptical, but I think that those innovations have definitely helped. I've actually dipped my toes into those zero DTEs just because we get so many questions about them that I've had to swing a couple and then turn on some of our tools to handle those. But we definitely get a lot of questions, and there's a lot of interest in that. So people are liking those, Mark, and I think that really helped the volume numbers.
Yes, the onset of those pretty much expiration every day, as you put it, that couldn't have come at a better time. And it always comes at a great time, listeners. It's your question, so it's time to put out our shingle for our office hours.
It's time to answer your pressing questions about options. It's time to start our office hours. You can become a part of this segment by leaving a question on theoptionsinsider.com, emailing us at questions@theoptionsinsider.com, or via social media at twitter.com/options, facebook.com/theoptionsinsider, or stocktwits.com/optionsinsider.
All right, everybody, welcome to the office hours, the portion of the show where we take your questions and comments on a whole bunch of issues. I just realized I got so excited earlier talking about everything earnings season, everything in our earnings volatility report, I neglected to give you the results of our actual poll. So I'm going to do that right now here at the top of the office hours. All sorts of interesting, it's a very contentious issue, obviously, which is always good to see diversity of opinion. We're asking you guys, of course, what is your outlook for this earnings season? You think it's going to be about the same, somewhere in that 85 to 90% range? Is it going to be an action-packed season, so north of 100%? Or is it going to be below 80%, which would be pretty boring? And right now, 41.7% of you folks are saying it's going to be somewhere about the same, that 85 to 90% range. Exactly a third, 33.3%, said it's going to be pretty boring, below 80%. I hope that third is wrong. And then 25% so far saying it's going to be an action-packed season. I'm hoping for a little more of that one. At Options is the place to go, listeners, to make your voice heard. Mr. Matt, what are your thoughts on that so far? Our audience expecting the same or actually a bit of a snooze fest for the most part?
A surprise. I thought it would. I thought that people, if they're listening, would realize that I think it's going to be pretty much of a blowout earnings, just because there's so much. There's so much uncertainty out there that some of these stocks are really moving a lot more than usual. So a little surprised there, Mark.
Well, this is early voting. It just went live yesterday before the option block. So this is early voting. This is our question of the week, listeners. I expect, certainly as this show hits the network and others, for those numbers to evolve. Get over there. At Options is the place to go to make your voice heard. Speaking of making your voice heard, listeners, we asked you this question last week, and I'm curious to get both of your thoughts on this as well, Eric and Matt. Our question last week was, it seems pretty straightforward, but clearly it is not. We said a recession is usually defined as 2 quarters of negative GDP growth. It seems like everyone is kind of skittish out there right now to actually ring that recession bell. So we're going to put the question to the ultimate arbiter, which is, of course, our audience. Quite simply, is our economy in a recession right now? Heck yes, heck no, or we need a new definition. And overwhelmingly, 75.9% of you chose heck yes. 17.2% saying maybe we need a new definition, which I can't really fault you with. No one seems to be embracing the old one. And then 6.9% of you say heck no. Mr. Eric, does this kind of jive with what you're hearing as you're doing your Options Man About Town at all these events? Nearly 80% of our audience saying we're in a recession. And do you agree with that, sir?
Well, I would tell you down here in the state of Florida, Mark, there's definitely a recession. I mean, food prices. I went to vote early this morning, and the chatter, at least from the elderly folks, the Seinfelds, the Jerry Seinfeld type of people that are here in Southeast Florida, even though they're driving their Lexuses and their high-end cars, they're certainly talking. But no, I'm being facetious. But yeah, I mean, certainly. I mean, I agree with your audience. This has been something that the younger generation hasn't ever seen. I talked about it at one of the events I was in Nashville in May. With a much younger advisor. And I said, look, I remember sitting in the car with my father, my brother in one, and my other brother in another with me on odd and even license plates. We were having to wait in line to get gasoline at the station because of the Iran situation and the oil embargo and everything else, and prices and mortgage rates are double digit. I mean, this is a really scary time. And so, I believe I'm in line with your audience.
Mr. Matt, same question for you. You probably voted in our poll. Which way did you vote? And are you surprised that nearly 76% of our audience chose heck yes, we're in a recession, sir?
Yeah, I mean, Eric reminded me of I remember that time too, but I didn't remember the odd evens, but now I do. And I remember Nixon came on the radio, the AM radio, and introduced wage and price controls. And my dad was a bit of an economist. And he hit the steering wheel and said, that's not going to work. So, but I think it's a lot different now. Just traveling to Chicago, I don't know how Eric's travels have gone, but there was a lot more people in the airports than I thought would be. And things were kind of happening. The restaurants were full, and I was surprised. Wages are still tough to get good workers out there. That's kind of propping things up a bit. But yeah, I mean, I think that, and it's difficult to compare because there's kind of an overhang with, the pandemic. People kind of stocked up on things, and now they're, I don't know about you, but we're using some of our back stock. So it's hard to compare. I think it's in a recession. I don't think it's as big right now. I think it will. get a bit worse as the tightening continues. But I'd say that we're in it right now. I don't think it's as bad as you'll hear on the talking heads, but I think we're in one right now, Mark.
All right, let's get up some of our other questions here. Thomas, good old Thomas Lee, has been waiting patiently. He listens on YouTube, looks like, and he says, "I have a tax question." Here's the disclaimer up front. None of us are obviously accountants or certified tax professionals, so consult your tax professional before you do anything out there. But that said, Thomas says, "I have a tax question regarding option spreads. If I close out a weekly call spread, one leg will usually show a profit while the other leg will show a loss," listener. So you're obviously in that scenario, listeners, you're buying one option and selling one option. So that's why he's talking about the difference in profits and loss versus for the same spread. He said, "Well, I'll be able to deduct the loss on my taxes because of the wash rule. And what if I continue to do a similar trade on the same stock the following weeks?" All right, there's a bunch of moving parts to that question there. Let's see if we can tackle them one at a time. First off, you're talking about a spread. I'm assuming you're buying a spread. So maybe you're losing money on the long portion of that spread. You're making money perhaps on the short leg of that spread. You're net going to still be making or losing money net on that spread, right? And that's really what matters. If you try to take the individual components, no, you can't just take the short leg and try to deduct that, because at the end of the day, what is that? That is short-term capital gains, right? That's going to count against all your short-term trading. So you have to add it all up. At the end of the day, the IRS doesn't look at just one spread. They're going to look at all of your short-term gains, all of your long-term gains, and that's how you calculate your bill out there. Now, the wash rule, that doesn't really impact you from taxes so much as it will prevent you from trying to do that same trade over and over again and trying to claim losses on it. So the wash rule will come into effect if you're trying to do the same trade over and over again, if you're claiming a loss every time, even though you also have gains. Obviously, at the end of the day, the spread is a whole. If you try to view it as individual parts and try to claim one and not the other, I think you're heading down a problematic road in the long term. Mr. Eric, as our resident, not just our resident man about town, but also our resident tax expert. I have just christened you that, sir.
Wow.
What do you have to say for Mr. Thomas Lee? Aren't you out there getting your CPA right now?
No, I am steering far away from the tax implications as it comes, other than saying that some of the recent news on contributions to qualified accounts have gone up. That's the 2 cents that I could give. That's a little exciting about some of the, that's for another show, Mark, about contribution limits increasing. And folks, maybe Thomas Lee, we can answer that for him another time. But the fact that they're giving an uptick on contributions, and I think those qualified accounts are places to be doing those multi-leg spread trades.
That is a nice thing. You're right. Something that will certainly be relevant for a lot of our listeners of this show in particular. And Matt, I know you're not a tax guy. I was joking, of course, with Eric being our tax expert. Actually, the tax expert is, of course, Mr. Matt. Mr. Matt, sir, anything you want to add here for Thomas, who's been waiting patiently for his trying to ferret out the losses and not claim the winners on his spread, sir?
No, I think you did a good job, Mark. Yeah, the wash rule is just when you're selling one and buying one of the substantially the same underlying instruments. But yeah, you're going to get the same treatment on the spread. So, they'll be short term most likely. So, yeah, I think you answered it well, Mark.
All right, let's keep on going here. See how many more we could squeeze in. You folks wait so patiently. I try to get as many of you guys and gals on the show as possible. Just like, speaking of gals, just like Liz here. Liz has a question. She says, how would you say the meme stock trend impacted overall options adoption by advisors? Does this make them more or less likely to use options? Well, it's an interesting question, Liz. Obviously, we are kind of post-meme stock now out here, so we can kind of look back on that, have a little bit more data in our back pockets, which is always helpful when answering questions like this. But again, in aggregate, when you have so many people out there trading options, and they literally did come to the options markets en masse. I mean, look at the numbers we just talked about. The numbers are staggering by just about any metric you can see. So just in aggregate, when so many people out there are trading options, that has to accrete up to the advisors. They're hearing it from their clients now. We all know client demand at the end of the day is the biggest driver for what advisors are going to do. If your clients want it, they're going to try to figure out a way to do it for you. But that said, let's go to our event correspondent, our options man about town. Mr. Eric, you've been out there hitting these events during the meme stock period, and now this year in this, let's call it post-meme stock period. What would you say for Liz here? What would you say has been the impact of the meme stock trend on advisors and their willingness or perhaps lack thereof to trade options for their clients?
I think like anything else, Mark, it required advisors to get a better understanding. So going way, way back to probably some of the earlier launches, Mark, of your program, and when you and I talked about why advisors aren't embracing options, I think it comes back to anything. When a client's coming to an advisor and bringing something to their attention, they need to sort of, kind of focus on it, get their hands around it. And look, we had the launch of some more of these online firms that clearly benefited, from that. I like to use the word parabolic growth of meme stocks in 2020. I mean, I think the volumes were astronomical. They sort of declined a lot in 2021, and we've seen some pullback. But I think what it did overall is it gave the retail folks that, again, as you mentioned, Mark, and I think Matt did too, were at home, sort of got involved in and started to learn a little bit more, started to follow your shows, Mark, because it really helped them out, and kind of understood that there are ways to invest and then trade, adding overlays, and there are solutions to the direction you want to use. And so I think overall, Liz, I think it's a great question. I think that advisors have sort of steered away from the memes right now. But I think what it did do is it kind of got advisors, I said it just before a little while ago, got advisors again to think about where that idea of options fits into their strategic approach to planning. And so maybe the memes were the fire that, sort of lit the attention under the advisor community. And so it's a good thing.
Anytime everyone's coming to the party, it's definitely going to be a good thing. Mr. Matt, what are your thoughts on this? As Liz wants to know, how did the meme stock trend impact overall options adoption by advisors?
It was so popular and in the news so much that many advisors had to address these questions from their clients. And so that's a good thing. On the bad side, some people made a lot and then all of a sudden lost a lot. And so, I think for the advisors, that could be a very scary thing. So I think it's a good question. But I think overall it was probably a positive for options in the advisor space. Having to learn about it, coming to your shows, get educated on what can happen. It's in the news. So yeah, I think it was impactful, definitely, and I think probably to the positive for advisors, Mark.
All right. Speaking of the ladies here, let's squeeze one more in. This one comes from Marina. She says, I have clients asking about Bitcoin exposure. I would prefer to use something optionable. Is the BITO product my best choice? I know more than a few advisors who use the GRAYSCALE product, but as far as I know, that isn't optionable. Am I correct? Yes, you are correct, Marina. That is one of the issues. We talked about that last episode with Mr. Bill Ulivari, kind of the blockchain advisor, as he calls himself. He's kind of one of the advisors who's really big into crypto these days, but also has obviously an options background. Check out that episode if you missed it, Marina. But yes, that's one of the issues with GRAYSCALE is that it is not optionable. So I know for a lot of our audience who want to use all the strategies we talk about here on the show, covered calls, selling puts, put spreads, all that kind of fun stuff, GRAYSCALE is a bit of a no-go for you. You can't do that stuff. And for a lot of the deep, liquid Bitcoin options markets, you're looking at Deribit, and Deribit is also a no-go for most of the US-based audience because you can't trade on Deribit without violating their terms of service, and it's not really a way I would recommend for a lot of advisors to proceed on behalf of their clients, violating the EULA on Deribit and trying to VPN in with the different IP address. It's not the way you want to go for trading large amounts of assets. So Deribit, pretty much a no-go as well. So you're down to a couple of the choices. You have the CME offerings. Now, those are regulated by the CFTC. They're centrally cleared, so there is some benefit to those. From a liquidity perspective, though, they're still not lighting the world on fire. You have two options each on CME. You have the large and small Bitcoin options, and you have the large and small ETH options now. So the large ones are pretty much for funds. The micro is where you will be looking for CME, micro ETH and micro Bitcoin. They're starting to get more volume, but it still is somewhat sporadic. Some days they'll do a decent amount of paper, and then they'll sit there for a couple of days and not really doing much. So the liquidity is still not there. And also, these are futures and options on futures. So that has to be something you have to be willing to entertain. So if you want to keep things in a security account and trade options on crypto, BITO is kind of the only game in town, for at least for right now. There are other ETFs that have launched post BITO, haven't really gotten the traction. The first mover advantage really went to BITO. BITO is somewhere around 80,000 contracts a day right now, so it's putting up the numbers. So in terms of if you want a product that is optionable, we discussed it on the show earlier this year as well, Matt and I, in terms of we were all surprised at how well BITO is actually tracking. It's not losing a ton of its value due to roll yield like a lot of us thought when it launched. So it's become a much more palatable prospect, at least for me when I'm talking about it. I've been trading some options on it. I know, Matt, you've been trading a lot of options on BITO as well out there. You blame me for getting you into BITO options. I blame you for luring me to the dark side of BITO options. The truth is probably somewhere in the middle. What do you have to say here for, who is it, Marina? Is the BITO product, in terms of being optionable, is that her best choice?
Yeah, I traded my first BITO contract talking to you.
It's all my fault. I lured you to the dark side.
So, take it as you will. I like BITO, and it tracks well. BITO, at least according to white charts, doesn't have that large of a discount or premium to NAV, whereas Grayscale, they're getting in a lot of trouble. I think that they might even trade at, some large discount to NAV.
Yeah, it's pretty hefty. That also gives me some pause for them, yes.
Yeah, and I did a regression on the show as well. On the tracking, and BITO was good. So, and another thing I should point out, if you look at the historical volatility, or however you call it, realized volatility, compared to implied is way higher right now in BITO. And so there's, I own some BITO, I own some Bitcoin, obviously, and I'm trading BITO against it. Now, obviously, I don't get to offset those, but there has been a bit of opportunity there for vol selling. I wasn't selling before; I was doing more caller stuff. But it's an interesting product. BITO is, and the fills are getting a lot better. So I would definitely recommend BITO over the other ones.
Yes, I've been dabbling out there with some ratio put spreads out there. It's been pretty attractive as the put wing kind of got bid up over the last month and change. It's been very attractive to do those buying one, selling two type of strategies out there. So yes, BITO, very interesting. I think you could do a lot worse there, Marina, on behalf of your clients than some of the other products that we mentioned. All the stumbling blocks associated with them. Unfortunately, listeners, that music means we come to the end. Somehow this show always flies by. It just shows we're having fun. But before we go, let me go back and check in with our network correspondent, the options man about town, none other than Mr. Eric COTT himself, who he's not talking to us. He's busy building out this cool new online destination for learning more about everything he's up to. Mr. COTT, if I want to learn more about our options man about town, where should I go? What should I do?
Absolutely. And thanks again, Mark, for welcoming me back. And Matt, it was great to share some time, and I miss seeing you guys in person. I know that'll happen real soon. So yes, soon to launch here, but I can most certainly direct your listeners and others to www.COTT Consulting. That's COTTCONSULTING.com. So www.cottconsulting.com. More to follow, and excited about this launch, I guess, and more importantly, Mark, it's kind of like I'm grown up. I'm diving in the deep end of the pool. It's about time, after all these years.
All grown up, as they like to say. I'm looking at your picture right now on COTT Consulting, and it says in big letters at the top of the site, Eric will be attending various conferences. So there you go. He is our man about town. I'm going to send you a mic flag and a microphone, and maybe a cool little hat or a shirt, and you can be our network correspondent. And maybe we'll get you back on just to talk about Impact. That's coming up pretty soon.
Happy to do it.
All right, so there you go. Man about town, Mr. COTT. Check him out for yourselves. COTT Consulting, COTT Consulting.com. Check out that big headshot of Eric. You can't miss it. It'll haunt your nightmares, but it's all good stuff. And Mr. Matt, sir, if folks want to reach out to you, check out your new dashboard, or maybe talk about some back testing or all the other cool stuff you have cooking over there at ORATS, where should they go? What should they do, sir?
hopefully they could go to my Match.com COTT consulting profile.
We'll get that out there.
But yeah, we're up to a lot. We're now doing adjustments for exit. So let's say you have a position on. We're bringing positions in from many of the brokers that Eric has mentioned, and you can set up your exit. And you can just exit to get out of it if you have a certain amount of profit, or you can roll it to a certain option. So we're very excited about a lot of the things that we're working on right now. It's at orats.com. I'm Matt at ORATS. So and let me know if you have any questions. Our front end's getting a lot of attention. Scanning's awesome. Positions are really cool. So come on over, Mark, and have some fun.
There you go. Check them out over there, orats.com, ORATS.com. Give them a follow on the old Twitters while you're at it, at OptionRats, all one word. Pretty memorable handle. He puts out some good data in between episodes of the Advisor's Option. And last but certainly not least, you know where to go if you have questions about all the data we were talking about for the options volume, or you want to learn more about options in general, optionseducation.org, the home of our friends over there at the Options Industry Council. A lot of great information, studies. If you want to arm yourself with data when you're talking to your clients about options, they have some studies and data for you to check out, and a whole bunch more. Optionseducation.org is the place to go. We got to get on out of here, but don't worry, back again tomorrow for Education Wednesday, Options Bootcamp, and Options Playbook Radio. Matt just joined us on Options Bootcamp, had a fun discussion about all things trading options during earnings season. So if you missed that one, listeners, check it out over there, the most recent episode of Options Bootcamp. And of course, all the other great content we have hitting the network all the way back until another episode of The Advisor's Option. Stay safe out there, everybody.
Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the SIBO over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit ORATS.com or email Matt Amberson at matt@orats.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.